All right, here we go. As Christina mentioned, the markets are open. First, we want to talk about the overnight sales that we saw happen here this morning. One of those was a correction from USDA. So let's go through these. We sold 350,000 metric ton of corn to China overnight. We sold 106,000 metric ton of corn to Japan. We sold 129,000 metric ton of soybeans to China, 318,000 tons of soybeans to unknown. And then we had USDA correcting a sale of corn last week, 140,000 metric ton. Originally, they said that was unknown destinations, but they corrected that this morning and said that's to China. So we had 4 overnight sales and then one correction, but still a lot of overnight sales here to talk about this morning. All right, so let's go to the grains here this morning and see what's going on. We'll start in the corn market. Futures numbers provided by a bar chart. December corn, unchanged, 368.5. March down 3/4 cent. Over in the soybean market this morning, 6 1/4 cents higher on that November contract, $10.02 and a quarter pennies. So 10.02 1/4, and we got as high as 10.08 3/4 last night on the overnight trade. The wheat market here this morning, Chicago first, December up a half at 542.5. Remember, September goes off the board today, last trading day for that. The Kansas City wheat market for December is up 1 1/4 at 472.5. The new crop July is down a half a penny at 495.5. December Minneapolis wheat down 1 1/2 at 530 3/4. And over in the cotton market, the December contract is up 118 points at 65.99 cents per pound. Brian Hoops is here with us this morning. Good morning, Brian. It's good to talk to you this morning. Glad that you've joined us. So overnight sales here, a lot of overnight sales, some of it of corn, and yet corn just kind of opens up unchanged. Is that a surprise?
Yeah, good morning, John. You know, we traded higher initially in the overnight, and we are seemingly struggling right at the 370 mark for December corn. Soybeans kind of struggling around this $10 area, not able to get much above it. And I think, you know, producers are looking at the 370 December corn as an opportunity to lay off some risk in here. We still have record yield expected from the government, and you know, no guarantee that they're going to continue to lower these yields. They did last month. They lowered the state of Iowa's harvested acres by over 500,000 due to the high wind damage. So I think there's a real incentive for the producer in here to look at $3.70 corn and, you know, look at that as a 50 cent to 45, 50 cent better objective than what they saw a month ago, and pass off some of that risk to to someone else rather than carry all that risk as we start our harvest. And harvest is really going to ramp up this week, John.
Brian, let's say we take that Dees corn all the way up there to 370. Do you think there's any old crop or much old crop left out there to sell? Or do you think that some of it could just get sold right off the truck?
Yeah, I think a lot of it is going to get sold right off the combines. There may not be a lot left in producers' hands. I think a lot of it has been moved already. You know, and what the market is actually telling you, especially in the case of soybeans, is not to plan on storing any of this crop. You know, soybeans for November, 10.02 on the board. If you look out to May, it's the exact same price. July is just a penny higher. You can't store your crop on your farm and pay any type of commercial storage, certainly, and try and make money at that. Just financially standpoint, it makes a lot of sense to sell right off the combine, take the profits, and then turn around and if you want to re-own those, buy at a cheaper price level, buy futures or options to re-own it going out into the spring and summer months.
All very good points, Brian. I tell you what, let's take a break. We'll come back in just a moment and see how the livestock trade is opening up. That's coming up next here on the Market Day Report. Now on to the livestock trade to see how things are opening here this morning so far. We get the October live cattle contract 70 cents a hundredweight higher at 106.22. December's up 72 at 110.62, and the February is up 60 cents this morning, a higher start to the day. The October feeder cattle contract is up 77 at 141.35, and the November up 67 at 142 even. The January up 102. The hog market this morning on this Monday, lower. October is up 5. That is the only one that is higher. It's at 66.62. The December is down 65 at 65.35. The February down 17 at 69.30. No, Brian, this hog market here, yeah, a little bit lower here this morning, but what a ride it has had here lately. Does this weaker here concern you at all?
Yeah, John, the hog market, like you said, has had a really good move here to the upside. It closed on the lows of the day on Friday, gapped higher, rallied sharply, and then dropped into the closing bell and right near the lows of the day. So it's having a tough time doing it, and much in the way of follow through. And today is the first day of expanded limits where they changed limits in the hog. So they will have 450 limits going forward, and certainly not testing those with just some very light movement today.
All right, let's talk about this cash cattle trade last week. There was a little bit of trade that took place there on Friday, a little bit of cleanup action. It was steady to $1 higher, depending on where you were standing at. But this morning, the futures are off to a little bit of a stronger start here, particularly over here in the fats.
Yeah, they are. There's talk right now about a little bit of a tightening of supplies. Maybe we're going to see, a week or two of a little tighter supplies, and that would give us some strength in the cash market. Of course, cash was weaker last week, but the futures are trying to look ahead and see that maybe here we oversold the market too much and trying to see some sort of a little bit of recovery. We're seeing a little bit of a bounce here in the futures, but, oversold conditions being relieved here. And this is kind of, I feel, just a retracement of the down move that happened in most of the month of August. So, probably looking at some hedging opportunities if this rally matures a little bit further.
All right. And that feeder cattle market a little bit firmer here this morning, especially on the deferred contracts.
Yeah, they certainly are. And you look at the corn market kind of struggling here. A break in that market could see some buying interest in the feeder cattle contracts.
Brian, thank you very much. We'll talk to you very soon. All right, over here on the cutouts, the beef cutouts and the pork cutouts, and this would be from Friday afternoon. The beef cutouts were lower. We were down anywhere from 12 cents to, on the choice, down 94 cents. Select's down 22 cents. I stand corrected. That was at 207.10. Then on the pork cutouts, well, most everything was higher. Carcass is up 39, loins up 2.29, the belly's up $1.17. But the hams were down $2.21. We'll see what happens here with our midday report. Janet, back to you.